Macroeconomic reports are shaping market sentiment. However, speculative activity is not always reasonable. Recently, traders have been opening trades based only on the data issued by official agencies. Notably, the accuracy of such data is under question. Meanwhile, the employment report published on Friday caused some doubt among traders. That's the US unemployment rate dropped to 3.7% from a 3.9, thus approaching an all-time high. Nevertheless, the US dollar just inched up instead of surging. What's more, before the end of the trading day, the US dollar started losing value. At present, it has almost returned to the levels recorded before the publication of the US Labor Department data. The greenback's movement was determined by some other reports. In particular, the number of new jobs in the non-farm sector increased by 199,000. Although the figure exceeds the forecast of 160,000, it's not enough. Judging by the US population, its growth pace, and economic activity, the economy needs about 250,000 new jobs every month. Since the beginning of the year, the economy has seen 2,552,000 new jobs, which is about 223,000 jobs a month, slightly below the needed level. Notably, during the last 2 months, there have been less than 200,000 jobs created. Meanwhile, the situation with the US employment is a bit different. During the same 11 months, it increased by 2,325,000. In other words, a monthly rise totaled 211,000. What's more, in the last 4 months, it has shown growth of more than 200,000. Taking into account the data, one could hardly explain why the unemployment rate is falling. Thus, there are a lot of questions concerning the accuracy of the data presented by the US Labor Department. This, in turn, has a negative influence on the greenback. That's why the currency may continue losing value amid overbought conditions. On a Friday, the euro-dollar pair showed high activity, thus causing a prolongation of the current correctional movement. Curiously, sellers' activity resulted in just a 30 pip decline. Although the euro is oversold in short-term time frames, some traders' sentiment remains bearish. If the price settles below 1.0750, it may slide to 1.07. To continue recovering, the euro should consolidate above 1.08, thus putting a global rise in the number of long positions. Meanwhile, the pound-dollar pair reached the support level of 1.25 amid high speculative activity. However, the volume of short positions dropped shortly after, and this led to a technical pullback, even though bearish sentiment still prevails in the market. The pound sterling may slide deeper, ignoring oversold conditions if it settles below 1.25. Otherwise, the current support level may allow traders to open more long orders, thus boosting the currency. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow news with us, and see you soon.